Hello students, hope you all are preparing well for your exams. In this video, I would be discussing December 2022 question paper. That is, in this video, I would be discussing only direct tax part. And before I start, few disclosures, few clarity guys. See, this question paper is as per the assessment year 22-23 or the previous year would be 21-22. Previous year would be 21-22. But whatever I would be discussing is as per Finance Act 2022. That is as applicable for June 2023 exams and December 2023 exams. Fine. So I would be following whatever year they have given in the question only. But if there is any amendment from that year to the current Finance Act, that is Finance Act 2022, I would be disclosing it accordingly. I will be explaining it. If not, whatever period they have given in the question, because normally in the questions means for December 2022 question, whatever I would be discussing now, the question will be for previous year 21-22 or assessment year 22-23. Accordingly, we will follow the same. But if there is any change in the provisions, accordingly, I will mention that. Fine. And before I start discussing, see guys, I have also prepared one reference material. That is, wherever more clarity is required for students, I would be explaining each and every question. But wherever more clarity is required, I just pick a particular content from my regular study material and I have placed it here so that you guys also can refer to it and you will have more clarity. You would have studied all this already. So now it will be easy for you to immediately refer to. So with this disclosure, we'll start discussing guys. Chalo, part 1, which is direct tax or income tax. The first question. Highest administrative authority for income tax in India is what? That is income tax or direct tax. What is the highest administrative authority? That is Central Board of Direct Taxes, guys. CBDT. Okay. Then coming to the second one. Itharth, who is a resident and not ordinary resident in India. Okay. He is resident but not ordinary resident. R and NOR. Okay. Earns the following income during the previous year ended 31st March 2022. Interest on UK development bonds. 1/4 being received in India. 4 lakh. Means obviously the remaining 3 lakh is assumed to be received outside India, guys. So entire 4 lakh is earned outside India. But out of that 1 lakh is received in India. So how much should be taxable for him? 1 lakh. 1 lakh should be taxable in India depending upon his residential status. Then profit on sale of building in India. Whenever the asset is in India, income is deemed to accrue in India as per section 9. But received in Holland, doesn't matter. Income is earned in India means it is taxable. Whoever you are, whether you are an ordinary, not ordinary, non-resident, doesn't matter here. 4 lakh. So should we consider full 4 lakh? Yes. So what is the income for him which is taxable in India? Which is 5 lakh. It is 5 lakh. If he was an ordinary resident, then entire global income would have been taxed. I would have considered full 4 plus 4, 8 lakh. But he is a not ordinary resident. So, as per my regular study material, in the scope of total income table, where does this person falls? In the second category. Agree na? So, I'm coming to the amount. So, with respect to interest on UK development bond, only 1 lakh is received in India. So, out of 4 lakh, 1 lakh will fall here. Whereas remaining 3 lakh will fall here. Whereas that is not taxable for not ordinary resident. Yes, sir. Then coming to income from the sale of building in India, where does it fall? Income deemed to accrue or arise in India. It is always taxable for you. Agree? So even that is fully taxable. Sure. We'll go ahead. Then AB and Co. received 21 lakh as compensation from PQ and company for premature termination of contract of agency. Amount so received by AB and Co. is dash. Now see guys, this amount compensation received on premature termination is a capital in nature. Why? Because they are not received regularly. They are non-recurring in nature. Normally in income tax, if something is capital in nature, not taxable. But if it is specifically included in the Income Tax Act, it is taxable. And this item is specifically taxable under income tax law. And hence, it is capital in nature, but taxable. But taxable. So A is the answer for this. Okay. Next, Nayak, a non-resident residing in US since 1990, came back to India on 1st April 2020. Okay, he came to India on 1st April 2020 for permanent settlement. Means he will never go back again. That is what we can understand. What will be his residential status for assessment year 22-23? So he came on 1st April 2020. They are asking for assessment year 22-23. So that means previous year is 21-22, guys. Okay. When did he come to India? On 1st April 2020 completely. Now can I tell during our previous year what is applicable as per the question? Did he stay in India completely? Yes, full 365 days he was there in India. So as per section 6 subsection 1, he is resident. He is resident. Okay. Then once he is a resident, we will go to section 6.6 and check two additional condition. What are those two additional conditions? He should be resident in at least 2 years out of the last 10 years. He was resident in 2021 because he came to in India. But what about the past? He was not resident. So out of the last 10 years, only 1 year he was resident. Whereas the condition will tell he should be resident for at least 2 years out of the last 10 years. So in 2021, yes, he was resident because he was completely in India. Whereas in the past, he was completely outside India. Hence, obviously we can understand that he was not at all resident in India. So section 6.6, first condition is not satisfied. Even that 730 days or more during 7 years preceding the previous year. In India, he was there in only 2022. When we check his past, he was there only in 2021. Whereas in the past, he was not at all there. So did he satisfy that condition also? No. Hence, what is his residential status, guys? Resident but not ordinary resident. Resident but not ordinary resident. Okay, where is the option? Not ordinary resident. B. B is the option. Okay, you guys also can cross check with the answers. So even institute has given the answers like this. Okay, suggested answers. Fine. Chalo guys, few answers are not correct. We'll discuss about that going forward. Whatever they have given as suggested answers. Fine guys, we'll move ahead. Fifth question, which of the following lands is to be treated as urban agriculture land? See, this is as per the agriculture income definition given under section 2(1)(a). There, if the building which is attached to the land, if it is not situated in a specified area, then they are told the income from the building is also agriculture income, which is exempt in India as per section 10(1). Okay, so this is connected to that, but here they have not asked about the taxability and all. They are just asking which of the following lands is to be treated as urban agriculture land. So for which some area limits they have given. So agriculture income definition as per 2(1)(a) I have covered here. See, for this last point, if the income from building, then if the building is in a land which is not situated in a specified area, only then you will consider the income from building as agriculture income. Now what is specified area? They have given it here. Let us see. So up to 10,000. Okay, let me explain it here only. See guys, if there is any area where the population is more than 10,000, but up to 1 lakh. Up to 1 lakh. That area is urban area. That area is urban area. Plus 2 kilometers from there. Plus 2 kilometers from there is also urban area. Okay, urban area or specified area, one and the same. Specified area or urban area. Okay. Then, sir, what if the population is more than 1 lakh, but up to 10 lakh? Up to 10 lakh, that area will always be a specified area or urban area plus 6 kilometers from its border is also urban area or specified area. Okay. Then one more thing. Sir, what if the population is more than 10 lakh in a municipality or in a area? Then that area will always be a specified area or urban area plus 8 kilometers from its border is also urban area or specified area. Is also specified area or urban area. Sir, then what is not specified area is whichever municipality's population is less than 10,000. Less than or equal to 10,000. So please be careful. I will repeat quickly. If the population of the municipality is more than 10,000 but up to 1 lakh, then that area is a urban area plus 2 kilometers from its border is also considered as urban area. Same way. If the population of the municipality or locality or cantonment is more than 1 lakh but up to 10 lakh, then that area will be urban area plus 6 kilometers from its border. Then if the population of any municipality or cantonment is more than 10 lakh, that area will be urban area plus 8 kilometers from its border, guys. That is what is given here. Okay, and you can easily remember. So this 0, 0 will be keep on adding for the population, whereas here 2 plus 6, last one is 8. 2 plus 6 is equal to 8. I mean, that is just a shortcut, guys. Chalo. Now, what is the question? Which of the following lands is to be treated as urban agriculture land, which is nothing but specified area? Specified area. A land situated at an area 10 km from the municipality having population exceeding 10 lakh. No, it is only 8 lakh actually. Sorry, 8 km. They have given here is 10, so it is not urban. Next, a land situated at 3 km from the municipality having a population exceed 1 lakh but does not exceed 10 lakh. See, this will fall. Okay, because 1 lakh, more than 1 lakh up to 10 lakh means it is up to 6 km. And here they have given 3 km. Will this fall? Yes. Let us see the other options also. Whenever the question like this, please read all the options. A land situated at an area 6 km from the municipality having population exceed 1 lakh but does not exceed 10 lakh. So this will fall here. But here, how much kilometer is there from the border? Only 6. Whereas what is given in the question? 7 km. So this should have been 6. Even this is wrong. Then a land situated at 3 km from the municipality having population exceed 10,000 but does not exceed 1 lakh. This is actually 2 km. This should be 2 km, but what they have given is 3 km. So again, even this is wrong. So the correct option is B, guys. B. Okay. And when this kind of question is asked, it will take time for you to decide because everything looks same only. So it might be confusing. So please be careful. Try to recollect the provisions, connect to the question and accordingly answer, guys. If you want, you guys can also do the working like this and decide it. If not, it might be difficult for you. Chalo, we'll go ahead. Where yearly contribution of employee did not exceed 2,50,000, then amount received from recognized provident fund after 5 years of continuous service is fully exempt. Okay, this is assuming it is a recognized provident fund. See, if the employee contribution is within 2,50,000, then interest is also exempt, and whatever contribution is given, if it is up to 12% and all, it is exempt. But when you are withdrawing, is fully exempt. It is fully exempt. See, if it is more than 12% employer contribution and all, it is there. But what is covered here is employee contribution. So you need not worry about employee contribution. For employee contribution, percentage limit is not there. That 12% and for interest, whatever 9.5% is there, that is for both the contribution. Whereas for 12% limit, whatever is there, that employer contribution should not exceed 12% of salary. And here what they have given is employee contribution. And for employee contribution, we can claim ATC deduction. And at the time of withdrawal, is it taxable? No. If it is withdrawn within 5 years of continuous service, it is taxable. But if you are withdrawing within 5 years, that too for some health issues, yes, it is exempt. But if you are withdrawing the money after 5 years of continuous service, for any reason, it is exempt. It is exempt, but employee contribution in any year should not exceed 2,50,000. If it exceeds, assume, I'm just giving more explanation. The answer is very clear, is fully exempt. That's all. Okay, assume employee is contributing 3 lakh every year. In that case, how much is in excess of 2,50,000? 50,000. Agree, na? So on this 50,000, whatever interest is earned will be taxable. Not 50,000. Whatever interest will be earned on this 50,000 will be taxable. Hope it is clear. So here they have given it is within 2,50,000, so nothing would be taxable, guys. And this provision will be in salary head. So tax treatment of provident fund I have given now. So you can observe for recognized provident for employee contribution, deduction can be claimed under section 80C. And if the amount is withdrawn after 5 years of continuous service, fully exempt. If it is within 5 years, then it is taxable. But if it is within 5 years for health purpose, not taxable. Okay. Then the 2,50,000 thing also is given in the third note. Fine, guys. We'll march ahead. 7th one. After serving for 28 years and 7 months. Okay. In M Steels Limited, Nitin retired on 30th September 21. Is covered by payment of Gratuity Act 1972. The company has paid him a gratuity of 14,21,500. At the time of retirement, he was getting a basic salary of 37,500, dearness allowance of 3,800 and HRA of 5,200 per month. However, his average salary for the last 10 months is 36,400. Determine the amount of gratuity exempt. Please be careful, in the exam they may ask either exempt part or taxable part. What they are asking here is exempt part. So we have to apply section 1010. Okay. Now, first you check where he is covered. Non-government employee covered under Gratuity Act. Non-government employee covered under Gratuity Act, guys. So where will he fall? So I have given in my regular material the table here, na gratuity. So where will we fall? Here. Non-government employee covered under Gratuity Act. Least of the following is exempt. What are those, guys? Come on. Actually gratuity received 20 lakh limit, or the last option 15/26 into last drawn salary. See, to confuse you, they have also given 10 months average salary. Okay, that is required for the last case here. But for this question, is it relevant? No, sir. They have given you just to confuse. We have to take last drawn salary. And what is last drawn salary? Basic pay plus DA. And for DA, no condition. Okay. And number of years of service completed. Okay, sir. Chalo, we'll see. So we'll see one by one. A option is actual gratuity received, which is 14,21,500. Then B option is 20 lakh limit. Then C option, let us calculate. 15/26 last drawn salary would be 37,800 plus DA 3,800. It will be 41,600 per month you have to take. And sir, they have given HRA. HRA is not to be considered. Please be careful. They are given just to confuse you. Then number of years of completion of service, 28 years, 7 months. So 6 or more months, you have to round it up to next year. Please be careful. All these are important. So you have to take 29. So how much you will get? 41,600 into 15/26 into 29. You will get 6,96,000, guys. 6,96,000. So how much is exempt? Least of the following. Least of the following is how much? A, B, C. C is only least. 6,96,000. 6,96,000. So please be careful when the questions are like this with respect to calculation. Yeah, 8th one. Ashwini is an employee of British public school. His daughter Asha is studying in a said school at a concessional fees of 600 per month. Okay. Actual fees is 4,000 per month. Here, the employee's children is studying in the employer school at a concessional fee. How much they are paying? Only 600. But actual fees is how much? 4,000. The amount of perquisite taxable in the hands of Ashwini. See, guys, this with respect to perquisite. Whenever the employees' children are studying in the school owned by the employer, we have to check what is the cost of education in the similar institution in the similar locality. If it is more than 1,000, entire amount would be taxable. 1,000 is not exempt. Entire amount would be taxable. So here, how much would be taxable is, see, there are different opinion here as per CBDT circular and all, but I am going as per the income tax provision. 4,000 is the actual cost. Na? Yes, sir. But is this the entire benefit enjoyed by the employee? No, because he is incurring 600 rupees. If anything recovered by employee, we have to reduce it. Okay, this is per month. Into 12 you do. So 3,400 into 12. How much it comes to? 40,800. So the answer is 40,800, guys. Clear? But here, in the suggested answers, they have given different opinion. We'll just see that. 8 you can see. They have given 3 options. A is also correct, B is also correct, D is also correct. Okay, but as per us, our calculation, what was the answer? It is B, 40,800. And they have given some explanation. We'll just have a look on that. No need to get confused. I will just give a clarity also. We'll just go through what they have mentioned first. And then, what is the final conclusion? I will also tell. Question does not specify whether Ashwini is a specified employee or not. Option A is correct if Ashwini is not a specified employee. Option B is, that is option A will is what the answer? Entire nil. It is entirely not taxable if it is provided to a specified employee. But I don't believe that she is not a specified employee. Why? Because the value of benefit given to her is itself how much? 40,800. And obviously our salary will be more than 50,000. Agree? So that doesn't matter here is what I feel. Then option A is correct. Then option B, that is 40,800 is correct if Mr. Ashwini is specified employee and 1,000 rupees per month limit of exemption is not deducted because as per rule 3 of income tax rules, concessional fee would be exempt up to 1,000 rupees per month only. Above the limit, full value would be taxable. That is perquisite taxable with respect to concessional fees would be 4,000 minus whatever is recovered from the employee, which is 600. That is actual amount, which is 40,800, guys. Whereas they are also telling option D also can be correct. When is it? If you are reducing 1,000 rupees, assuming it is an exemption. Option D is, that is 28,800 is correct if Mr. Ashwini is specified employee and 1000 rupees per month limit of exemption is deducted by applying the circular issued by CBDT in case of taxability of meal. Here actually it is not at all meal, but still I don't know how they have given it. Perquisite taxable with respect to concessional fees would be what, 4,000 minus 600 whatever employee has paid minus 1000 rupees, they are taking it as an exemption, which is not correct. Clear? So as per that, if they go, the answer is 28,800 guys. Come on. So if you ask me, sir, which is the correct answer? 40,800 guys. 40,800, because what should be taxable in the hands of employees? What is the benefit he has enjoyed? Now if you take, sorry, entire 48, is it taxable? No. Why? Because he has paid 600 for it. Nah. So what is the free benefit he has enjoyed? Only 4,800. Only 4,800. And sir, what about 1,000? Should we reduce it? No. Law is clearly telling income tax provision. Only if the cost of education in the similar educational institution in the similar locality is up to 1,000 rupees, the taxable perquisite is nil. If not, entire amount is taxable. I will also show you here. You can see this bullet. Education facility provided in educational institution owned by the employer or education facility are allowed in any other institution by reason for office being in employment. Okay. What are the two things? Where the cost of education or value of benefit in similar education institution or near the locality is up to 1,000 rupees per month per child. No limit for number of children. Taxable value of perquisite will be nil. But in this case, is it within 1,000 rupees per month? No, sir. Then, where the cost of education of value of benefit is similar institution in or near the locality exceeds 1,000 rupees per month, then entire amount is taxable. Entire amount. It's not like only in excess of 1,000. So here, if the amount is more than 1,000, should we reduce 1,000? No, we should not. Yeah. But here in the notes, you can observe, I have given a clarity. While calculating the amount of perquisite, any amount paid or recovered from employee in this connection shall be reduced. That is what is the 600 in our question. Okay, not only for this perquisite, for any perquisite, if employee is paying, but he is paying less, still consider that. Reduce that amount. Only the net benefit will be taxable as perquisite, guys. Clear? Yes. Chalo. We'll go ahead. 9th question. A member of parliament is entitled to a salary, constituency allowance and daily allowance. Okay, salary, constituency allowance and daily allowance. When a parliament is in session, which out of the following statement is correct? They are asking which is correct. So sometimes they may ask which is incorrect. Sometimes they will ask which is correct. Please be careful with that also. A, is entire income is taxable under the head salary? No, because employer-employee relationship is not there as per section 15. That is the basic criteria. Is salary component and constituency allowance is taxable under the head income from other sources? Daily allowance is exempted. Actually, guys, both the allowance is exempt. Daily allowance as well as constituency allowance given to MP, MLA and all is fully exempt. Whereas salary is taxable. But where is it taxable? Under the head other sources. So even this is wrong. Then only salary component is taxable under the head income from other sources, whereas constituency allowance and daily allowance are exempted. This is actually the correct answer. Okay, these two are actually allowance, daily and constituency allowance is exempt, whereas salary, whatever basic pay, DA and all you will get, that is taxable under the head other sources and not salary, because employer-employee relationship is not there. So we'll see last option also. Only salary component is taxable under the head salary. Constituency allowance and daily allowance are exempted. No, it is not taxable under salary yet. Fine, we'll move ahead. Raj, an employee of central government, okay, central government employee, claims the benefit of lower slab rate under section 115 BAC, that is new scheme. His basic salary is 25,000 per month and entitled to 1,500 per month as entertainment allowance. Okay, is getting entertainment allowance of 1,500. He is entitled to a deduction under section 16(2) from his gross salary in respect of entertainment allowance for assessment year. No, actually he cannot claim any deduction. Under section 16, there are 3 deductions: standard deduction, entertainment allowance and profession tax. All these 3 are not allowed if an individual is opting for alternate scheme under section 115 BAC, guys. So what is the exemption he can claim? Sorry, what is the deduction he can claim for the entertainment allowance under section 16(2)? Nil. See, entertainment allowance is allowed as a deduction only for government employee. That too if they are under old scheme, not under new scheme. You can just see, I will just show it. See, section 16 deduction, all three deductions are not allowed if you are opting for alternate scheme, guys. That is section 115 BAC, optional scheme. Yeah, hence he cannot claim any deduction there. Abhinav has 3 residential house property, all of which are self-occupied. The annual value of, see, maximum you can keep as per the income from house property provisions, maximum you can keep 2 properties as self-occupied and the remaining properties will be deemed to be let out property. So here he is keeping 3 properties as self-occupied. So he will select, he has the choice. He has to choose only 2 house properties as self-occupied. Remaining 1 will be deemed to be let out property, guys. Okay. What are the options? All the house properties shall be computed as if these are deemed to be let out. No. All the 3 house properties shall be nil. No. 1 house property shall be nil and for the other this is also wrong. Then 2 house properties shall be nil and for 1 house property the annual value shall be computed as if it is deemed to be let out property. Yes, correct. For the deemed to be let out property, the annual value will be nothing but the expected rent because there is no question of actual rent for them. So straight away expected rent itself, you will take it as the gross annual value, guys. Chalo. Rani received a rent from house property in rural area, 20,000 per month. This rent is taxable under the head of what is property for her is there is no clarity. Whenever there is no clarity like this, you can consider it as the property owned by her but not used for business. Then in that case, income will be taxable under the house property. But there is a different opinions for this. See, if letting out of house property is her business, then it will be PGBP. Then it will be PGBP. Agree na? Then if by chance if this house property is in the land from where she is getting the agriculture income which she is using for agriculture purpose, then it can be covered under section 21A also. Then it might be exempt. Okay, so as the question is not clear, all these things you can think of. But when the question is not specific about those things, just consider it as income from house property. Even I guess in suggested answers, they have given multiple options. We'll see clarity they have given. See, wherever the question is not clear, they have given the clarifications like this. But the challenging thing is this things students will not be aware of in the exams. So to the extent possible, ICSI has to set the question, has to put efforts to set the questions properly in such a way that the students will not have any questions or any confusions with respect to whatever information is given in the exam question paper. So what they have given, we will see. The question is silent whether the rural house property is situated on agriculture land or not. If it is situated in agriculture land, which is used for agriculture purpose, then the income from that building also will be an agriculture income, which will be exempt. So in that case, option D is correct if the house property is situated on agriculture land in rural area. Then option A is correct if the house property is situated on non-agriculture land and if Rani is in the business of letting out of property, in that case where it will be taxable, PGBP. Then option B, three options they are giving, is correct if the house property is situated on non-agriculture land and if Rani is not in the business of let out of property, in that case income from house property. Clear? So here also suggested answer you can see they have given 3. Sorry, for this kind of question, how do they consider in the exam? If you have answered any of this, either A or B or D, you will get the marks. You will get the marks. Fine. Chalo. So if the questions are silent like this, so don't make it first. So make it most appropriate assumption. Assume that the property is owned by her and accordingly you can consider income from house property. Nothing wrong if you take D and A also as an answer, guys. Yeah, 13th one. Javed borrowed 5 lakh at 12% per annum on 1st April 2013 for construction of his let out house. Okay, let out house property, whose construction was completed on 15th March 2019. Come on, guys. Pre-construction period, post-construction period. Pre-construction period starts from the date of loan till when? That 31st March immediately preceding the date of completion. When did the construction completed? 15th March. So immediately preceding 31st March means 31st March 2018 it is. Please be careful. Not 2019, it is 2018. So post-construction period will start immediately after the next day. When pre-construction period ends, immediately next day, post-construction period will start. Hope it is clear. Fine. What are they asking? And the loan was repaid completely on 31st August 2021. Okay. Fine. So the loan was completely repaid. So it is understood that till year nothing was repaid. Till 31st August 2021, nothing was prepaid. The deduction of interest for previous year 21-22. So they are asking what is the deduction for 21-22? So it includes, as it is in the first 5 years, see guys, whatever interest is related to pre-construction period, it will be allowed in 5 equal installments from the year in which construction is completed. So construction was completed in the year 1819. From that year, every year you will claim that year interest, plus for the first 5 years, you will claim 1/5 of pre-construction period interest. Okay, now is 21-22 falling in the first 5 years? Yes. Post-construction period started from 1819. So 1819, 1920, 2021, 21-22. So we are still in 4th year. We are still in 4th year. So whatever is the pre-construction period, first calculate the period, and loan is not repaid until 31st August 2021. So consider entire amount was outstanding. So from the date of loan till 31st March 2018, how many years are there? 13, 14, 14, 15, 15, 16, 16, 17, 17, 18, 5 years. So on 5 lakh at 12% for 5 years, what is the interest, guys? I will just calculate. 3 lakh rupees. 3 lakh rupees. This is pre-construction period interest, which you will claim in 5 equal installment. Okay. Then for 21-22, what is the current year interest? Current year interest is not for the entire year because you have repaid the loan. And for 1819, 1920 and all, whatever is the interest for the current year plus 1/5 of the pre-construction period, you would have already claimed. So for 21-22, what is the current year interest? It is only from April to August. That is April, May, June, July, August. That is only for 5 months you have to calculate as it is repaid. Okay. How much is this? Please be careful, it is repaid. If not, we would have considered full year also. Into 12% into 5 by 12, 25,000. Then 1/5 of pre-construction period interest, 3 lakh into 1 by 5. So 3 lakh by 5, 60,000. So what is the total interest he can claim under the house property? That is as per section 24B, subsection B, he can claim 85,000, guys. 85,000. This kind of question will take some time for you to derive the answer. Interesting question. Nice. Yeah. Then coming to 14th one. Nishit was allowed a deduction of unrealized rent to the extent of 1,20,000 in a financial year 2021. Although the total unrealized rent during 2021 was 1,60,000. So actually it was unrealized rent 160. But how much was allowed for him? Only 120. Only 120. Maybe for remaining 40, rule 4 condition would have not been satisfied. Something like that. Because if you want to reduce unrealized rent while calculating the actual rent, agree now? While calculating actual rent, from annual rent, you will reduce unrealized rent only if rule 4 conditions are satisfied. So they are told only 120 was allowed, whereas remaining 40 was not allowed. Agree now? Yes. In financial year 2021-22, he is able to recover from the tenant 90,000 on account of such unrealized rent. His income under the head of house property for assessment year 22-23. Interesting. See, as per section 25A, if unrealized rent which was allowed as deduction or which was reduced while calculating actual rent, if it is realized later, it is taxable in the year in which you have received it. How much? 90,000 I have received. But out of this, 40 was disallowed. Now reduce that much. Whatever was disallowed, you have to reduce that much. So how much is remaining? 50,000. How much is remaining? 50,000. And in section 25A, they have clearly told 30% flat deduction is given. 30% flat deduction is given for unrealized rent. This is with respect to standard deduction. So how much is left? 35. So how much is taxable? Under the house property, when he has received the amount in assessment year 22-23, is 35,000, guys. Is 35,000. This is as per this provisions. House property. Yeah, 25A. Clear? So whenever it is received, If it is allowed as reduction while calculating the actual rent in the past, then when you have received it, it is taxable. But here out of 90,000, 40,000 was not allowed. So I will reduce that first. Remaining is how much? 50. And for that 50, under subsection 2, 30% flat deduction is allowed. What is the remaining amount? Only that much would be taxable. What is the remaining amount? Only that much would be taxable. This is very similar to bad debts recovered. Similar provision is there even for under the head PGBP for bad debt recovered under section 41 subsection 4, guys. Okay. Which of the following losses is or not allowed as a deduction in computing income from business or profession, that is PGBP, which is not allowed as deduction while computing PGBP income? Which are those? Pre-incorporation losses. Pre-incorporation loss is not allowed. Pre-incorporation expenses is allowed under section 35D. Okay. Yes. Capital losses which are dealt under the head capital gain. Which are dealt under the head capital gain. See, this is not allowed. It is allowed against capital gains income. But here, capital losses which are dealt with under the head capital gain. Okay. See, it is a capital gains loss. Can capital gains loss be adjusted against PGBP? Can capital gains loss be adjusted against PGBP? No, because short-term loss can be adjusted only against short-term gain or long-term gain. Whereas long-term loss can be adjusted only against long-term gain. Can it be adjusted against PGBP? No, you cannot. Okay, even this is. Then loss incurred from closure of business. So after the closure of business, if you have closed the business and after that if there is any loss, can you adjust that? No. So the answer is all three, guys. Answer is all three. 15th one. See, we'll see what they have given. 15th, they have given BD. Okay, we'll see what is the clarification they have given. Correct option is D. However, option B may also be considered as correct if pre-incorporation losses would be covered under 35D, that is deduction of preliminary expenses. Actually, answer should be D only. They have told it can be B also, but 35 allows preliminary expenses, not preliminary losses. Okay, preliminary expenses is the expenses which you have incurred before the commencement of business. What they have given in the question is losses, not expenses. There is a difference between loss and expense, guys. Yeah. Then for 14th also they have given some clarification. Let us see. Option B is correct. That is 63,000, 90,000 minus 30%. Assuming unrealized rent received subsequently does not impact the calculation of GAV in the previous year, which is not correct. Okay. Obviously, in the past, how much was allowed? Only 1,20,000. But actually, how much was your unrealized rent? 160. So there is a difference of 40 which we have to adjust. Option C is correct. That is whatever I did. Okay. So as per me, option C should be the correct. Option B is not at all correct, guys, because it will be a wrong assumption if you do that. Fine. Chalo, we'll move ahead. 16th. Arshit acquired following intangible asset in the business during the financial year 21-22. On 25th June 2021, he purchased goodwill of the business. Cost of acquisition is 50 crore. On 7th October, he purchased tenancy right. Cost of acquisition 25 crore. No other asset are in the block. Compute the allowed depreciation for assessment year. So depreciation under section 32, they are asking. For intangible assets, the depreciation is always 25%, guys. Okay. But on intangible assets, depreciation cannot be claimed for goodwill. Actually, goodwill is also intangible asset only, but in section 32, read with rules, they have clearly told no goodwill, no depreciation on goodwill. Okay. Now, can we claim it on tenancy right? Yes, you can claim it. So, what is the cost? 25 crore. When is it purchased? 7th October. Please be careful. So, here the previous year is 21-22. There is one condition under section 32 telling if the asset is purchased and put to use for less than 180 days during the previous year, you can claim only 50% of normal depreciation. Your normal depreciation is 25%. You can claim 50% of that. You can claim 50% of that. So the amount of depreciation will come to 25 crore into 25%. Out of that 50%. So let me calculate 25 into 25% into 50%, which is 3.125 crore. 3.125 crore. Please be careful with the date of purchase also, guys. If the 7th October means obviously from 7th October to 31st March, you calculate it will be less than 180 days. Okay. And I have in my regular classes or in my regular material, I have also given one standard date for you guys to remember. So if you remember that, if the purchase is before that, provide full depreciation. If purchase is after that date, then only 50%. 4th October, which is a standard date. for previous year 22-23. Yeah. Giridhari, a retail businessman, acquired furniture on 12th May 2021 for 10,000 in cash. Okay, exactly 10,000 is allowed. If it is more than 10,000, see, please be careful. This is connected to section 43(1) and section 32. Section 32 talks about depreciation. To calculate depreciation, you should have actual cost. How to calculate actual cost is given in section 43 subsection 1, where they tell if you have paid more than 10,000 in cash to a single person in a single day, it is disallowed. It is disallowed. Means in rule, okay, you have to connect to rule 6A, B, B, A also. They have told what all mode is allowed. It's so electronic mode or banking channel is allowed, including account pay check and account pay demand draft. You can make the payment. Yeah, chalo, we'll see. So he acquired furniture on 12th May 2021 for 10,000. It is fine? Yes. If it is more than 10,000, it is not fine. Here it is exactly 10,000. It is fine. And on 18th May 2021 for 35,000 and 40,000 by bearer check. See, bearer check is not allowed. Account pay check is allowed, guys. And account pay check. So that respectively, 35,000 is not allowed, whereas 40,000 is allowed. Okay. When is this purchase? May. So totally, what is the cost? As per section 43(1), 10,000 which is paid in cash is acceptable. Then 35,000 which is paid through bearer check, it is more than 10,000 and it is not paid through account pay check, hence not allowed. Plus another 40,000 is paid through account pay check, hence allowed. So what is the cost as per section 43(1)? 50,000. So what is the depreciation you can claim? Under section 32, which is the asset furniture. Furniture means 10%. See, you have to remember the rates and all. And sir, is it full year? Yes, full year. Here it is full year, as it purchased has happened in the May. So the answer is B, guys. The answer is B. I have also mentioned here, you can see they have mentioned one new rule, rule 6ABBA. Okay, as per this, the payments can be made only through the following modes. And here, one of the mode is account pay check, bank draft is there, whereas bearer check is not there. Please be careful. And even 10,000 is exactly paid in cash. That is fine. If it is paid more than 10,000 in cash, it is disallowed. So rule 6ABBA is applicable for section 43(1) also. So please be careful with it. I have given this in my regular study material at the end of PGBP chapter, guys. Fine. We'll go to next question. Sham Limited paid 6 crore 60 lakh during the previous year 2021 for acquiring a telecommunication right, which is effective for 11 years license period. Okay. It commenced the business of operating telecommunication service with effect from 10th April 2021. That is from the year 21-22. Sham Limited shall be entitled to a deduction of, see, telecommunication right, whatever you obtained, or telecommunication fee, whatever is paid, can be amortized over the term of the license period. Here the license period is 11 years. Now they have paid it in 2021. But when are they starting it? 21-22. When are they starting it? 21-22. So from when they can claim? From 21-22 for 11 years. Okay, because before starting their business, they cannot claim deduction, because they don't be having any business financials. They will not be having any PGBP head income and all. So hence they cannot claim. So they can claim only from the year in which the business is commenced. So how much it would be? 6 crore 60 lakh divided by 11 years, guys. Divided by 11 years. So it will be 60 lakh. It will be 60 lakh from which your previous year 21-22. Yeah, the answer is B. Please be careful. Same 60 lakh is there for previous year 2021 also. They took the license in that year. But if the license is taken before the commencement of business, you will start claiming the deduction from the year in which the business has commenced. Please be careful. Yeah, let's just cross check once. Divided by 11. Yeah, fine. Chalo. PQR, an eligible assessee following mercantile system of accounting, carrying on eligible business under section 44 AD, that is presumptive scheme, provides the following details. Total turnover for the financial year 21-22 is 65 lakh. Okay, total turnover. Is it within 2 crore? Yes, because only when the turnover is within 2 crore, you can opt for 44 AD, which includes the following. 12.5 lakh received by account pay check during the financial year 21-22. That is fine. Then 25 lakh received by cash during the financial year 21-22. 12.5 lakh received by account pay bank draft before due date of filing the return and 15 lakh not received till due date of filing the return. Actually guys, this question is with respect to what should be the amount of deemed profits or presumptive income of PQR under section 44 AD subsection 1 for assessment year 22-23. See, there are two rates, 6% and 8%. Actually, the presumptive income is 8%. But if two conditions are satisfied, then it is 6%. Sir, what are those conditions? It is given under section 44 AD only. See, I will repeat once again. The presumptive income under section 44 AD is 8%. But it is reduced to 6% if you have satisfied the following condition. What are those? Turnover or gross received sales is received by any mode other than cash. It can be received in any mode but other than cash. And it should be received before the due date of filing the return of income. Sir, what if it is received in cash? 8%. Sir, what if it is received after the due date of filing the returns of income? 8%. Yeah. So here it will be for this two figures, that is 12.5 plus 12.5, it is 25 lakh. You have to apply 6%, whereas remaining amount is how much? 25 plus 15, 40 lakh. For 40 lakh, it is 8% because they are not satisfied the condition. One, that is 25 lakh is received in cash, whereas 15 lakh is not received within the due date. Yes, guys, let us check. 25 lakh into 6%, which comes to 1.5 lakh. Then 40 into 8%, which is 3.2 lakh. So 1.5, 4.7. 4.7 is the answer. That is D. So the presumptive income of PQR Limited as per section 44 AD is 4,70,000. Fine. Interesting question. Yeah. 20. Which out of the following transactions are deemed to be a speculative transaction? Okay, deemed to be speculative. Purchase and sale of shares otherwise than by actual delivery. Actually, what is speculative transaction? Buying and selling something online without physical delivery. So A is actually correct, but we'll see the other three also. Forward contract, trading in derivatives or commodity derivatives, hedging contract in respect of raw material. See, all these three are not speculative. Clearly, they are given in the law. Even I have mentioned it in my regular material, you can see. Okay, speculative business or speculative transaction means what? A transaction in which contract for the purchase or sale of any commodity including stocks and shares is periodically or ultimately settled otherwise than by actual delivery. Means you are not taking actual delivery. You are buying and selling something online. Okay. And speculative transaction will not include. They have given forward contracts, then hedging contract and commodities. Everything. Yeah. Chal, we'll move ahead. So answer here is A, guys, for 20th question. 21st. XYZ, a partnership firm, is earning book profit of 5 lakh during the financial year 21-22. They have already given the book profit. A firm paid remuneration as per partnership deed to a working partner 4,50,000 and to a non-working partner 90,000. See, for a non-working partner, remuneration is not at all allowed as per section 40B. Agree, na? As per section 40B, which is exclusively applicable for firm, remuneration paid only to working partner is allowed. That too as per a deed. Okay. Calculate what amount of remuneration is disallowed to firm under section 40B of Income Tax Act 1961 for the assessment year 22-23. So actual remuneration paid is 4,50,000 plus 90. Actual remuneration, how much they have paid? 450 plus 90 is 5,40,000. Okay. So what is permissible remuneration? We will calculate. Permissible remuneration is as per 40B. So up to 3 lakh book profit, it is 90%, which would be 2,70,000. Then what is the actual book profit? 5 lakh. So on the remaining means remaining is how much? 5 minus 3, which is 2 lakh into 60%. 2 lakh into 60% will be 1,20,000. Yeah, 1,20,000. So 390. What is permissible remuneration? As per section 40B, guys. This is as per 40B. What is permissible remuneration? File or limit 3,90,000. So whichever is lower is allowed. Whichever is lower is allowed. How much? 390. Fine. What have they asked? Calculate what amount of remuneration is disallowed. So disallowed is the difference. 540 minus 390. 540 minus 390. 150 is disallowed. 1,50,000 because actual remuneration paid was 5,40,000, but how much is allowed? Only 3,90,000. So the remaining is disallowed only. the remaining is disallowed. So this is as per section 40B, which is applicable for partnership firm. See like this. So salary, remuneration or bonus, commission and all is allowed only to the working partner. So for a non-working partner, completely disallowed. So this is how we calculate the limit as per section 40B, guys. Chalo, we'll go ahead. 22, question number 22. Which out of the following is a capital asset? Is the capital asset? Okay. A Maruti dealer holding cars for sale. No, it will be a stock for it. Then a Maruti dealer has Honda City car for his personal use. Okay, because see, personal asset, it is a personal asset not included in capital asset definition. Capital asset definition is given in 2 clause 14, which will not include personal asset of movable nature. Jewelry held by a jeweler for his personal use. See, jewelry held by jeweler, not for his business, for his personal use. Is it a capital asset? Yes. See, capital asset definition clearly tell it will not include the personal asset of movable nature, but there is some exclusions, which exclusion includes jewelry, paintings, art and all. So your jewelry is a capital asset if it is held for personal purpose. Yes, this is the answer. We'll see last option also. Jewelry held by jeweler which has been held as stock in trade. SIT means stock in trade. For him, whatever he sell will be PGBP, not capital asset. Okay, so hence this will also be not the answer. Clear? Yes. So there is a difference between C and D. C, jewelry is held for personal purpose. So if you sell that, capital gains get attracted. Whereas D, jewelry is held for business purpose. If you sell it, it will be taxable under PGBP head. Okay. 23rd. Suresh entered into an agreement with Ramesh for sale of building for 30 lakh in June 2021. Suresh received advance of 3 lakh. Subsequently, the agreement was cancelled and Suresh forfeited the advance money. The advance money is, where is it taxable, guys? See, if the when it was received and forfeited, June 2021. If the advance money is received and forfeited on or after 1st April 2014, then it would be straight away taxable under the head income from other sources. If it was before 1st April 2014, then it was different. I guess I have considered here. Yeah, you can see. Advance money received, this will come under the head other sources as well as connected to capital gains also. Advance money received and forfeited by the assessee, present owner, where transfer did not take place. If it is before, in my case, it will not fall under before. On or after 1st April 2014, it shall be taxed in the year of forfeiture, that is in the year in which you have received and forfeited it, under the head income from other sources, guys. So here, entire 3 lakh would be taxable under the head other sources. A. Taxable under the head of income from other sources in the year in it is forfeited. Yes, correct. Let us see the other option also. Taxable under the head capital gains. No. Deduction from cost of acquisition. No. Deduction from cost of acquisition. No. Yeah. Next. 24. If new agriculture land purchased for which exemption was claimed under section 24B is transferred within 3 years. See, 54B provides deduction for purchase of new agriculture land. You have sold old agriculture land and if you have purchased new agriculture land, then you can claim deduction under section 54B. But whatever new agriculture land you have purchased, you cannot sell it for next 3 years. There is a lock-in period of next 3 years. Sir, if I sell, what happens? Whatever exemption you already claimed will be withdrawn. And what is the effect of that? Here you can observe last point under section 54B. If the new agriculture land is also transferred within 3 years from the date of acquisition, the cost of new land would be reduced by the capital gains exempted earlier. So on the sale of new asset which you have sold within 3 years, you have to again compute capital gains. So you will take full value of sale consideration. From that you will reduce cost of acquisition. But from the actual amount of cost of acquisition, you have to reduce whatever exemption you already claimed because now it is withdrawn. Yes, we'll see the option. Capital gain exempt under section 54B earlier shall be separately taxable as capital gains. No. Capital gains exempt under section 54B earlier shall be added to the cost of acquisition. No, it will be reduced. Capital gain exempt under section 54B earlier shall be reduced from the cost of acquisition of a new house property. New house property, no? This new agriculture land. Question is not correct. D. The entire capital gain on new transfer of shall be taxable. No, actually C should be the answer. But here they have given new house property. It is actually the new agriculture land. Okay, what they have given in the suggested answer, we'll see. Question number 24. There is no clarity given here, but option given is C. Answer is given as C only, but they have given by mistake, I guess they have given new house property. Here also they have given like that only. It should be agriculture land, new agriculture land. Okay, anyway, except that all other things are correct in C option, so you can better choose like this, C. I feel that institute has to take steps in order to correct all this, at least in the upcoming attempts. 25th. Purushottam has transferred 250 equity shares of TCS Limited, a listed company, on 1st March 22 at 3,200 per share and paid securities transaction tax on the same. Okay, that is STT. He purchased this share on 1st January 2017. Please be careful, before 1st February 2018 it is. When did he purchase? 1st January 2017, because section 112A was introduced from 1st February 2018. If the EFT is purchased before 1st February 2018, then the cost calculation is different. We will see as per section 112A. At what price? 2,400 per share. The quoted price of TCS Limited share on 31st January 2018, that is immediately before this date, was 550 per share. What will be the taxability in the hands of Purushottam for assessment year 22-23? They have given some cost inflation index also, which is actually not relevant, because to calculate the long-term capital gain under section 112A, cost inflation index is not at all applicable. Fine guys, this is as per 112A. 112A includes 3 assets only, that is listed equity shares, unit of equity oriented fund, or unit of business trust. I call them in short EFT. Okay, fine. Now this was purchased when? Before 1st February 2018. In that case, what will be the cost calculation? Come on guys, higher of A or B, but B is lower of 2 things. We'll do one by one. Fair market value as on 31st January is given how much? 2,550. So 2,550 per share. Then actual sale consideration. Full value of consideration is nothing but actual sale consideration, which is 3,200. 3,200. So whichever is lower we have to take, which is 2,550. Okay. Actual cost of acquisition is how much? On 1st January 2,400. So actual cost is 2,400. Whichever is higher we have to take, which is 2,550. So what is the cost of acquisition for this equity, listed equity shares? 2,550. Come on guys, we will do that. Sale consideration is 3,200 minus 2,550 is the cost into 250 shares. Into 250 shares. This is the long-term capital gain. And for listed equity shares, what is the period of holding? 12 months. If you have held it for more than 12 months, it is a long-term guys. Yeah. 3,200 minus 2,550 into 250 shares. How much it comes to? 1,62,500. But 112A clearly tells not entire amount is taxable, only in excess of 1 lakh. So how much is taxable? 62,500. At what rate? 10%. Long-term capital gain under section 112A is 1,62,500 only, but entire amount is not taxable. Up to 1 lakh it is not taxable. So reduce 1 lakh, remaining 62,500 would be taxable. So what is the answer? 62,500 is taxable at 10%. So all this I have given. So the tax rate is applicable is 10% in excess of 1 lakh. In excess of 1 lakh. Sir, what if these shares were purchased after 1st February 2018, but it is a long-term shares? It's a long-term shares. Then I have mentioned here, you have to straight away take only the cost of acquisition. Whatever is your cost, take that, reduce from the sale value, that will be your capital gain. And it will be long-term only. No question of indexation for computing the long-term capital gain under section 112A. Fine. Yeah. 26th, Kirti acquired a house property on 25th July 2015 for 8 lakh. On 15th June 2021, she became a partner in partnership firm. On this day, she transferred this property to partnership firm as her capital contribution. Okay. The fair market value of the property as on 15th June was 20 lakh, but it was recorded in the books of accounts of the firm at 18 lakh. Compute the capital gain chargeable to tax in the hands of Kirti for the assessment year 22-23. What will be the sale value for her? 18 lakh. This is as per section 45 subsection 3, guys. I have just given it here. We'll quickly go through it. You can see I have just taken only what is relevant for this question, not the entire section 45. Where a person transfer a capital asset to a firm, AOP or BOI in which he is already a partner or is to become a partner, member by way of capital contribution or otherwise, the profits and gains arising from trust transfer will be chargeable to tax as income in the previous year in which such transfer took place. Okay. And what is the full value of sale consideration? The full value of sale consideration will be the amount recorded in the books of accounts of the firm or AOP or BOI as the value of capital asset. So at what value did the firm record this asset? 18 lakh. So for Kirti, what is the full value of sale consideration? 18 lakh. Chalo guys. So in which year did the transfer took place? 21-22. In which year did she purchase the asset? 15-16. 15-16. So full value of sale consideration would be 18 lakh. From that, reduce indexed cost of acquisition as it is a long-term asset. House property, for an house property or any immovable property, the period of holding is 24 months. If you have held it before transfer for 24 months, it is a long term. And she has held it from 2015 to 21. So it is a long-term asset. Okay, guys. So 8 lakh into, for the year of transfer, 21-22. What is the cost inflation index? 317. See, please be careful. I am going as per the information given in the question. For you guys, the previous year is 22-23, where the cost inflation index also will change. But here, I am following whatever is given in the question, or else the numbers will change. If I take the cost inflation index for 22-23 and all, then the numbers will change, which will not be there in the options. Okay, that is why I am strictly following whatever information they have given in the question only. So for you guys, it might be transfer would have happened in 22-23 and they would have given cost inflation index. If not given, it is 331. You hope you guys will remember that and accordingly calculate. Okay. Yeah. Chalo. 8 lakh into 317 by what is the cost inflation index for the year of purchase? 15-16. 15-16. They are given for 14-15 also. Might be to confuse you. 254. How much is that? 8 lakh into 317 by 254, 9,98,425 you will get index cost of acquisition. Reduce it from 18 lakh, you will get 8,01,574 or 575 if you round off. 8,01,575 long-term gain, long-term capital gain. Fine guys, chalo, we'll move ahead. 27th, Surjit invested 22 lakh in equity oriented mutual fund specified under section 1023D during the previous year 21-22. He earned a dividend income of 7,50,000 from above investment. Dividend income. Okay. And see, for mutual fund exemption is given under section 1023D, not for the investors. Please be careful. For this investment purpose, he has taken loan from Axis Bank and paid interest of 2,20,000 during the previous year 21-22. Income from other sources included in the hands of Surjit for the previous year 21-22 would be, see, income from other sources. Dividend income will always be taxable under that income from other sources. And to earn that, if you have incurred any expenditure, you can claim it. Except against casual income, you cannot claim. But here, he has taken a loan and they have invested. So he is paying a interest of 2,20,000. Can he claim full 2,20,000? No. It is restricted to 20% of the income. How much is 20% of 7,50,000? 1,50,000. So 1,50,000 or 2,20,000, whichever is lower. Whichever is lower is how much? 1,50,000. So how much you can claim deduction? Only 1,50,000. Remaining 6 lakh would be taxable, guys. Remaining 6 lakh would be taxable. This is as per the income from other sources under section 57. You can see first point itself. I have given in my regular material also. Just a second, I will clear this. Yeah. Interest expenditure incurred to earn such income is allowed as a deduction. That is, in case of a dividends or income in respect of units of mutual fund or income in respect of units of specified company. Interest expenditure incurred to earn such income is allowed subject to deduction of maximum 20% of such income. 20% of such income means dividend income. So don't take 20% of interest expenditure, 20% of income. No deduction will be allowed for any other expenditure against the dividend income on mutual funds, guys. So how much would be taxable here is 6 lakh. Okay, we'll move ahead. 28. Venkatesh has received 35,000 from each of his two friends on 14th February 2022 on the occasion of his marriage anniversary. Marriage anniversary. See, if you have received any gift on the occasion of marriage, it is not taxable. But if you are receiving it on marriage anniversary, then section 56 to 10 will be applicable. Exception is if you are receiving it on the occasion of marriage. Sir, why? Because marriage can be celebrated only once, not every year. Okay, and you guys will experience it later. So, what would be the taxability of the said sum in the hands of Venkatesh for the assessment year 22-23? So, he's receiving 35,000 each from two of his friends. So, is it more than 50,000? Yes. Aggregate amount you have to take, which is 70,000. Aggregate amount, sir, 35 is within 50 now. Aggregate amount, if it is more than 50,000, entire amount is taxable. Is it taxable? Yes. Entire 70,000 is taxable. Entire 70, and don't reduce 50 there. Sir, 70 minus 50, only 20 is taxable. No, entire 70 would be taxable. Please be careful. And here they have given marriage anniversary. Please don't get confused. Only on the occasion of marriage, if you receive, it is not taxable. Champa Lal, age 65 years, received interest from MP state government due to late payment of compensation for compulsory acquisition of capital asset amounting to 12 lakh on 17th July 2021. What amount is taxable under that? Income from other sources. See, in case of interest, whenever there is a compulsory acquisition, if there is a delay in payment of compensation, if interest is paid, that interest would be taxable under that other sources in the year in which it is received. But 50% flat deduction will be given. So 12 lakh is received. So only 50% of that would be taxable. How much is that? 6 lakh. Remaining 50% is allowed as flat deduction, guys. This is also given under section 57 in income from other sources only. Yeah, E point, you can see. In case of income by way of interest on compensation or enhanced compensation received chargeable to tax under section 56 to 8, deduction of 50% flat deduction it is. Of such interest, no other deduction would be allowed under any other clause of section 57 in respect of such interest income. Okay. 30th question. At the time of fixation of marriage of Yash on 10th June 2021, his father Sundar gifted land to his would-be daughter-in-law. Okay, to be daughter-in-law Rashmi. At the time of fixation of marriage itself, he is giving. The marriage was held on 21st January 2022. When did he give the gift? 10th June at the time of fixation. But marriage happened on 21st January. The income accruing on land after marriage shall be taxable in the hands of whom? Come on, guys. See, first of all here, will clubbing be attracted? Will the clubbing be attracted? No, sir. Why? At the time of fixation of marriage of Yash, 10th June 2021, his father Sundar gifted land to his daughter-in-law. So, was she a daughter-in-law? Was there any relationship in the year when he is giving the gift or at the time of giving the gift? No. At the time of giving the gift, not the year. At the time of giving the gift, was there any relationship? No. So please be careful. So gift was given before the marriage. If it is given on the occasion of marriage, then 56 to 10 will not be applicable for the daughter-in-law because they are related, and on the occasion of marriage, it will not be applicable. But now for the daughter-in-law, will section 56 to 10 be applicable? Yes. When it is applicable, and will clubbing provision be applicable? No, because on the date of giving gift, she was not daughter-in-law. She was to be daughter-in-law. So will section 64(1) get attracted? No, sir. So income will be taxable in the hands of whom? Whoever is the receiver. What is the name of daughter-in-law? Rashmi. It will be taxable in the hands of Rashmi only, guys. It will be taxable in the hands of Rashmi. So yeah, they have given B only as answer. So it will be Rashmi. I will explain this once again. Just observe. Interesting. Father-in-law gifted the property to be the daughter-in-law. Okay, were there father-in-law and daughter-in-law on the date of gifting? No. So is section 64(1) applicable? No. Next, for daughter-in-law or for Rashmi, let us use the word Rashmi. When she is receiving the gift, is section 56(2)(10) applicable? Yes, because on the date of receiving the gift, it was not on the occasion of marriage. So will it be taxable? Yes, whatever is the stamp duty value of the property, okay, will be, that is land, will be taxable in our hands provided it is more than 50,000. Yes, sir. And once she received the gift, who will be the owner? She. And any income she earned from that property, it will be taxable in whose hands? Rashmi hand only. Rashmi hand, and clubbing will not be attracted here. If the property was gifted by, who is that? Yesha. Father, Sundar. If property was gifted by Sundar to his daughter-in-law after marriage or on the occasion of marriage, then clubbing would have attracted. In that case, the income from that land will be taxable in the hands of Sundar. But here, it is not attracted, guys. Yeah, we'll move ahead. Mandip, whose total income excluding his income, this income is greater. Okay. Has 3 minor daughters whose total income are 4,500, 1,000, 3,500 respectively. The total income clubbed in the hands of Mandip for financial year 21-22. See, clubbing for minor children is attracted under 64(1)(a). They have told Mandip, the father is only having higher income. And it is, see, question is not clear about did they earn the income. The children earn the income out of their skill, knowledge and all, they are not mentioned. So assume that it is not out of their skill. Fine. How much is that? 4,500, 1,000, 3,500. Will the clubbing get attracted? Yes, in the hands of Mandip. And when clubbing get attracted under section 64(1)(a), exemption under section 1032 can be claimed for each minor child, 1,500 maximum. The amount clubbed or 1,500, whichever is lower. So 3 daughters are there. Please be careful. Take individually. 4,500 is the amount clubbed. Minus 1,500 exemption can be claimed. What is the remaining amount? 3,000. Then for another daughter, 1,000. How much exemption he can claim? 1,000 only. Because the amount clubbed or 1,500, whichever is lower. So nothing is taxable. Then for another daughter, 3,500 minus exemption. This is under section 1032. How much is taxable? 2,000. So totally, what is the net figure clubbed with the income of Mandip? 5,000. After claiming exemption, how much is clubbed? 5,000. This is as per section 64(1)(a), read with that section 1032, guys. 1,500 is the maximum exemption, and that too per minor child, and there is no limit. No limit of 2 children, 3 children, nothing like that is there. But the amount of exemption that can be claimed is the income clubbed or 1,500, whichever is lower. Whichever is lower, guys. Chalo. We'll move ahead. 32. Nishant gifted a house property valued 40 lakh to his wife, Sarita, who in turn has gifted the same to her daughter-in-law, Babita. Okay, Nishant gifted a house property valued 40 lakh to his wife, Sarita. So here section 27 is applicable. Who is the deemed owner? Nishant. Okay, Sarita is not considered as owner for income tax purpose as per income from house property section 27. Who is the deemed owner? When husband give the gift to the wife without consideration, it is Nishant. Okay. And Sarita gifted this property to daughter-in-law Babita. The house was let out at 30,000 per month throughout the previous year 21-22. In which hand and how much income from house property is chargeable to tax for assessment year 22-23? Come on, guys. Here, see, clubbing also we have to check, and section 27, which is deemed ownership, we have to check. Actually, even though the property was gifted by Nishant to Sarita, who was the deemed owner? Nishant. And Sarita gave this property to Babita, who is daughter-in-law. Will clubbing get attracted there? No, because Nishant is still the deemed owner. So which will prevail here? Clubbing up section 27, section 27. Now, for whom it will be taxable? The rental income for Nishant. It is for Nishant as per section 27. Come on. What is the income from house property for him? 30,000 per month. So gross annual value straight away you take that only in the absence of fair rent, standard rent and all. So into 12, it is 3,60,000. No other information is given. No other information is given. So reduce straight away standard deduction. Don't miss the standard deduction. 30%. So the amount would be 2,50,000. 252 taxable in the hands of Nishant. Please be careful with standard deduction. You have to consider that even though the question is silent. So 3,60,000 will be the GAV. From that, they are not given any information about municipal tax, interest and all. So reduce only standard deduction under section 24A, which is 30%, guys. Okay. Next. 33rd. Brought forward loss from house property 2,25,000 of assessment year 21-22 is allowed to be set off against income from house property of assessment year 22-23 of 4 lakh to the extent of brought forward loss from house property 2,25,000 21-22 is allowed to be set off against income from house property. Yeah, see, brought forward house property loss can be adjusted only against income from house property, but there is no limit. So how much is the loss? 2,25,000. How much is the income? 4 lakh. Can I adjust full 2,25,000 loss? Yes, you can adjust. See, if it is a current year house property loss, you will first adjust against income from house property. If not, you can adjust it against other rates. But maximum loss you can adjust is 2 lakh if it is a current year house property loss. But here, it is a brought forward house property loss, which can be adjusted only against income from house property and without any limit. Here, entire 225 can be adjusted as the income is 4 lakh, which is more than the loss. 34th, a partnership firm with 3 equal partners has brought forward depreciation of 3 lakh and business loss of 6 lakh relating to assessment year 21-22. On 1st April 2021, one partner retired or even died. So one of the partner is going out, so his share cannot be carried forward. The amount that assessee firm can set off against its income for assessment year 22-23. See, with respect to unobserved depreciation, they can claim full. How much? 3 lakh. They can carry forward full. Whereas with respect to business loss, how much? 6 lakh is there. One of the partner is going. So 1/3 of that cannot be claimed. So how much remaining figure they can carry forward is only 2/3, which comes to 4 lakh. Sir, what about the remaining 1/3? It is the share of the retired partner. As the partner is going, his share of loss cannot be carried forward. Because you would have observed in accounts and all, in case of retirement, death and all, whatever belongs to the partner, we will give him and send. Or in case of death, we will give it to his executor. Agree? So here also, whatever is the share of the retired partner, the business cannot carry forward. So here, unobserved depreciation is fully can be carried. For business loss means only to the extent of continuing partners, which is 4 lakh. So the answer is A, unobserved depreciation 3 lakh plus brought forward business loss 6 lakh. No. Unobserved depreciation 2 lakh, no. Unobserved depreciation 2 lakh, no. Unobserved depreciation 3 lakh plus brought forward business loss 4 lakh. This is the answer. This is the answer, guys. Yeah. Chalo. 35th. Where an assessee has not exercised option under section 115 BAC, means he has not opted for optional scheme, deduction under section 80 EEB is allowed to an individual on account of interest payable on loan taken by him from any financial institution for the purpose of purchase of electric vehicle, subject to a maximum of how much? 1,50,000. For purchase of electric vehicle, if you have taken any loan, interest on that loan can be claimed as a deduction maximum 1,50,000 under section 80 EEB. Next, 36. Adjusted gross total income for the purpose of section 80G of Income Tax Act 1961 means what? The total income after all the deductions, but before 80G. That's all. So we'll see. Gross total income minus short-term capital gain. Because see, against special income, you cannot claim deduction. So we have to reduce that also. Adjusted gross total income. I have told you how to calculate that under a respective section also. I have mentioned in my regular material. So first option, gross total income minus short-term capital gain under section 111A, long-term under section 112 and 112A, and exempt income. No, this is not the correct thing. Gross total income minus short-term capital gain under section 111A minus long-term capital gain under both 112 and 112A. Exempt incomes, all deduction under chapter 6A except deduction under 80G. This is the correct answer. We'll see the other options also. Gross total income minus short-term capital gain under section 111A, long-term capital gain under section 112, or 112A, all deductions under chapter 6A except deduction under 80G. See, this is also partially correct. Okay, here they have given exempt incomes also, but see, actually for me this might be the correct answer. Why? B and C both are correct, but which is the most appropriate? C. Why? I will tell. Because gross total income will not include the exempt income only. Because if there is any income exempt, you would have reduced it while calculating the income under the respective head only. Agree? So exempt income should not come. Okay. Anyway, again they have reduced it here. So the most appropriate answer should be C. Actually, what they have given in the options, we'll see. This is 35th. Question number was 36. 36. Where is it? It is, sorry, B. They have given B. Yeah. Okay. But what I feel is it should be C. Why? Because gross total income will not include exempt income, guys. Gross total income will not anyway include exempt income, because if there is any income exempt under section 10, you would have claimed it before claiming the total income only, or gross total income only. Yeah, fine. So the most appropriate answer for me would be C. So they have given it as B. Even B can be considered provided C was not given. If C is given, that would be the most appropriate answer actually. Yeah, 37. Where an assessee has not exercised option under section 115 BAA, BAC or BAD, deduction under section 80 IBA shall be allowed if the carpet area of the shops and other commercial establishment include the housing project does not exceed. See, here under section 80 IBA, deduction for some housing projects was allowed till 31st March 22. Any housing project approved before 31st March 22. So for you guys, that is previous year 22-23, this section is not important, not so relevant. Clear? Yes, this was asked in December 2022. So the answer would be, so as per this, it is IBA. Yeah. So as per the corporate area of the shop and other commercial establishment include the housing project does not exceed. It should be as per 37. Okay. But you need not worry. It is not relevant as on today, because it was only for the project which is approved on or before 31st March 2022, guys. So here it is C, that is 3% of the aggregate carpet area. It should be within 3% of aggregate carpet area. Okay. So not relevant for you guys. Sure. 38. Deduction under section 80 TTB of Income Tax Act 1961 shall be allowed if the total income includes 80 TTB, that is for a resident senior citizen, interest deduction for any deposits with post office, bank or cooperative society. Yeah. Interest on deposit in savings account with bank or post office allowed. Interest on deposits in savings account with cooperative bank allowed. Interest on the deposits in FD also allowed with bank or post office. So both the account, saving FD na, RD na, doesn't matter. Any of the above, it can be claimed as deduction. But maximum 50,000. Maximum limit is there. Yeah, 39. IN aged 75 years and a resident in India has a total income of 2 crore 60 lakh, comprising of long-term capital gain taxable under section 112, 35 lakh, long-term capital gain taxable under section 112A, 30 lakh, and other income 1 crore 95 lakh. That is nothing but normal income. What would be his tax liability for assessment year 22-23? Assume that IN has not opted for the provisions of 115 BAC. That means he is under regular scheme. So his total income is 2 crore 60 lakh, guys. When the total income is more than 2 crore, what is the surcharge rate applicable? Come on. What is the surcharge rate applicable? 25%. 25%. Chalo, guys. We have to calculate here separately. So under section 112, so 112, 35 lakh, which is taxable at 20%. So 35 lakh into 20%, 7 lakh. 7 lakh. Then 112A, 30 lakh is the income, but 1 lakh, to the extent of 1 lakh, it is not taxable. So 29 lakh into 10%, that is 2 lakh 90,000. So tax on special income is 9 lakh 90,000. Tax on special income 9 lakh 90,000. Okay. Then on normal income or other income, how much is that? 1 crore 95 lakh. Okay, guys. What is the age of the assessee? 75 years. Please be careful with that also. So what is the basic exemption limit applicable? Up to 3 lakh. Let me do it. Up to 3 lakh, it is nil. Then 3 lakh to 5 lakh, it is 5%. So 2 lakh into 5%, 10,000. Then 5 lakh to 10 lakh, that is 20%. 5 lakh into 20%, 1 lakh. More than 10 lakh. So more than 10 lakh means 1 crore 85 lakh. So 185, 1 crore 85 lakh into 30%. It is 55 lakh 50,000. 55 lakh 50,000. So the total comes to 5660. 5660 plus 9 lakh 90,000, which comes to 6650 plus 25% surcharge. So the amount will comes to 83 lakh 12,500 plus 4% health and education cess. 86 lakh 45,000. 86 lakh 45,000 guys. 86 lakh 45,000. Okay, yes. And for you guys, there are some different rates applicable for this special incomes and all. It is within 2 lakh, 5 crore, more than 5 crore and all. But those things are not a part of your executive syllabus, so you need not worry. This is how the calculation is. So the final figures comes to, for this you have to add 25% surcharge, and whatever figure you get, add 4% health and education cess. You will get 86 lakh 45,000 guys. 86 lakh 45,000. Fine? Yes. As I told you, see, actually there are few things which we have to consider with respect to capital gain special income. The maximum surcharge rate actually applicable is 15%, but it is not a part of your executive syllabus, so you need not worry about it. So whatever I have covered for your regular class also is this only. So just do the calculation, whatever is part of your syllabus, and give the answer. Actually, I guess the suggested answer for 39, we'll just see 39. What they have given is B, which is not the correct thing. So you need not worry about that also. This is not the answer. B. A should be the answer. Fine, guys. Chalo, we'll go ahead. 40th question. Just a second. XYZ Private Limited, a manufacturing company incorporated in India on 1st June 2021. During the financial year 21-22, it earned income from business of 20 lakh. The company wants to opt the benefit of 115 BAB. The tax rate of XYZ Limited for assessment year 22-23 shall be. If they are opting for BAB, then it is 15%. BAB, it is 15%. Yeah, is it? Yes, fine. Chalo, I have not taken here. Fine. So it is BAB means 15%, but there is some time limit and all. Within 31st March 24, you have to start. And when they have started, on 1st June 2021 only. So not a problem. And it is a manufacturing company. They are eligible for 15 BAB, and the rate would be 15%, guys. Chalo, we'll go to 41. The net profit as per P&L account of Zara Limited, domestic company, for the year ended 31st March 2022, domestic company, is 210 lakh. It includes 15 lakh as dividend from subsidiary company, and profit on sale of land is 18 lakh. The book profit under section 115 JB, this is with respect to MAT, of Zara Limited for assessment year 22-23 would be 210 only. Actually, this two we should not add or deduct it, so it should be 210 itself, guys. It should be 210 itself. So nothing to add, nothing to deduct there. This is on MAT calculation. Next, Nirmala, age 52 years, having adjusted total income of 45 lakh. She has opted for the provisions of section 115 BAC for assessment year 22-23. The alternate minimum tax is payable, applicable at under section 115 JC at what rate? No. Actually, if the individuals or HUF is opting for optional scheme under section 115 BAC, for them AMT provision is not at all applicable. AMC provision is not at all applicable, guys. So the answer is D here. 43rd, Under the Income Tax Act 1961, salary received by a partner from partnership firm is chargeable under the head PGBP. Because the employer-employee relationship is not there, in section 15 will not be applicable. So you have to go as per section 28 of PGBP. 44. Distribution of assets at the time of complete partition of HUF shall be regarded as transfer? No, it is actually not transfer. Not to be regarded as transfer in the hands of HUF. Be regarded as transfer in the hands of family members. No, it is not a transfer as per section 47, guys. As per section 47, which will come under capital gains head. 45th, M Limited, a domestic company, received a dividend of 12 lakh from specified foreign company in which it holds 33% equity share. The dividend so received by M Limited is taxable at 15%, but this was as per section 115 BBD, which is abolished now. It was there. So from the financial year 22-23, it has been abolished. For you guys, this will not be applicable, guys. Okay. So you need not worry about this. There was some section called 115 BBD where the dividend income for a domestic company was taxable at concessional rate. But now it has been abolished. Now it is taxable at normal rate under that income from other sources. No concessional rate and all. Okay. So even this question is not relevant for you. 46th, Deepika won 8,500 from Rajasthan Patrika crossword puzzle. Determine the amount of tax to be deducted as per section 194B of Income Tax Act 1961. It is a casual income. So for casual income, as per section 194B, TDS has to be deducted at 30% only if the amount is more than 10,000. And here it is within 10,000. So no TDS, guys. No TDS. Raja Limited makes the following payments to Rani, a contractor. Okay, Rani means individual. So TDS under section 194C. So 194C talks about TDS on contract payment. If the contractee or if the payee is an individual, what is the TDS rate? 1%. For work contract during the previous year 21-22, 25,000 on 10th May 2021, 22,000 on 10th August 2021, 27,000 on 10th December 2021, and on 10th March 2022, a payment of 30,000 is due to Rani. It is not paid on account of work contract. Determine the liability of Raja to deduct tax at source under section 194C from payments made to Rani on 10th March 2022. Interesting, guys. See, they have told. This is for previous year 22-23. As per section 194C, the payer, if he is a contractor, if the single payment made to contractee is 30,000 or more, TDS has to be deducted. Or if the aggregate payment in a year is more than 1 lakh, they have to deduct TDS. At what rate? It depends on the payee. If the payee is an individual or HF, 1%, if not 2%. So here the Rani is 1%. You can observe for this 3 payments, it is within 30,000. So single payments are within 30,000. Should TDS be deducted? No. But check. And what they have told, time of deduction. When is the time of deduction is? At the time of payment or at the time of credit, whichever is lower. Now on this, should TDS be deducted? Is due to be paid. Should we consider this also? Yes. Sir, it is not paid. No problem. TDS has to be deducted at the time of credit or at the time of payment. At the time of credit means at the time of giving the credit in the books of accounts, not the bank account. That is, we will record now. Contract payment to Rani. So we are giving credit to Rani as I am booking the expenses. So should I deduct TDS? Yes, only if the aggregate payment is more than 1 lakh. Individual payments, nothing is more than 30,000. So aggregate you check. 25 plus 22 plus 27 plus 30. Is it more than 1 lakh? Yes, it is 1,04,000. So should I deduct? Yes. How much? 1%. 1,040. 1,040. This is for the entire year. Individual payments is within 30, but in aggregate, including the payment which is due, it is more than 1 lakh. On the entire amount, not only on 4,000, it is on the entire amount, TDS has to be deducted. Okay. Next, 48. Suresh died on 30th March 2021 and his total income till this date was 5,55,000. That is on till the date of death. Thereafter, the business of Suresh was inherited by his son Kishan and his total income from such business was 4,25,000. The son does not have any other income. In this case, the son, he has to file separate return, guys. For his father also, he will be the representative. He will file the return as representative assessee. And for him, he has to file separate return. It's not like he will club both and file one return. No, he has to file two separate return. So what are the options? Has to file only one income tax return, which is wrong. Has to file only one return, which is wrong. Has to file separate income tax return, one on behalf of his father for 5,55,000. That was the income of his father till the date of his death, and other is in his own capacity 4,25,000. So he has to file for his father in the representative capacity. He has to file the return, whereas for him, he has to file a separate return disclosing his income. The last option is has to file consolidated income, which is wrong again. 49th. The intimation order under section 143 subsection 1 of Income Tax Act 1961 cannot be sent after the expiry of how much, guys? Come on. This is as per section 143 subsection 1, 9 months. 9 months from the end of financial year in which return is filed. Okay, this is as per section 143(1), which talks about summary assessment. Bottom I have given, you can see, no intimation for tax or interest due under section 143 subsection 1 shall be sent after the expiry of 9 months from the end of financial year in which the return of income is made. Made in the sense filed. Okay, so here it is A, option A. 50th, which of the following default is not covered under section 276cc of the Income Tax Act? This talks about some penalty. Willful attempt to evade the payment of any tax, interest and penalty. Willful failure to file return of income in time, that is within the due date under section 139(1). Willful failure to response to a notice under section 142(1), or willful failure to response to a notice under section 148. This is with respect to penalty. Guys, we'll see. So they are mentioned as A. So all other penalties are covered except A. Willful attempt to evade payment of tax, interest or penalty is not covered, whereas 139(1), if you are not filed the returns within the due date, is covered, as well as if you have not responded to the notice within the time given under section 142(1), or if you are not responded to the notice given under section 148 also is covered. So A is the answer here. So hope all this was helpful for you. I will close the recording here, guys.